Awesome. All right, thanks, folks. Well, welcome aboard. Very happy to be showing up this afternoon, especially as we trade into the close here. As Reed said, my name is Matthew Buckley. My call sign is Wiz, and we're going to have a good 59 minutes ahead of us. Want to put a bomb right through the window, right on target, on time, so we have a lot to cover in a short amount of time. What I want to learn, what I want to teach you all today, and I love listening to Anka. Anka lives right down the street from me here in God's waiting room down here in Boca Raton. Love Anka Metcalf, phenomenal woman and a trader. I strongly recommend you check her out. But what I want to talk to you all today about is what we call a trudge. Right? And I don't trade strategies. There's no such thing as an options strategy. I'm going to break some of your language that you've known for years if you've traded options. Well, okay, man, I love covered calls. They're my favorite strategy, or selling spreads or long call diagonals. Folks, those aren't strategies, man. They are tactics. A strategy, a financial strategy, is saving for retirement, saving for college, short-term income generation, buying a boat in 6 months. Those are strategies, folks. Tactics support a strategy. I guarantee you, I know the difference between a tactic and a strategy, but today I want to talk to you about something that we call at Top Gun Options a trudge. Okay, you making up words? Yeah, we are. With a trade, ladies and gentlemen, I want to make money, right? Money. With a hedge, you ready for this? Don't fall out of your seat unless you got a helmet on. With a hedge, I want to lose money. Okay, went to a webinar this afternoon. Trader shows up, tells me I ought to lose money. With a hedge, yes, folks. How many of you sit at your kitchen table every month and go, my God, I'm losing money on my USAA or State Farm or Allstate auto, home, and life insurance? Of course you don't. Matter of fact, I guarantee you most of you are like me. It's on auto debit, right? I forget I'm paying insurance until what? I need it. With a trade, I want to make money. With a hedge, I don't mind losing money because that means all of my longs are doing good. So at Top Gun Options, and today in our time together, I'm going to teach you about a trudge, a trade which can also serve as a hedge in case volatility spikes or the market rolls over. And real quick, folks, as Reed did my intro, I'm not going to take too much airtime here, but you can call me Wiz going forward. I think I go by Matthew, by my mom, and my wife if I'm in trouble. So you guys can call me Wiz. Flew the Hornet, graduated from Top Gun. Really not looking forward to Top Gun 2 coming out next year, but got to do some really cool things in the Navy. But the coolest thing, or one of the coolest things, was I applied everything I learned flying a fighter aircraft to my trading. Right? At the end of the day, trading is a form of combat. Somebody's going to win and somebody ain't. And the people that ain't, at least in my old business, didn't get to go home that night. It was a self-cleaning oven, and so is trading. So why wouldn't you practice or want to at least attempt some of the things that kept me safe over the skies of Iraq? Everything you're going to learn at Top Gun Options, I honed in the military and then in the corner office of a multi-billion-dollar Wall Street firm right at the intersection of right there, Jackson and LaSalle. Everybody knows this or should know this building, right? That's the Chicago Board of Trade. That was my old trading firm right there. Beautiful 5th and 6th floor of the CBOT. Had an absolute blast when I was there. I helped build a hedge fund. I helped build the retail brokerage that many of you know, Options House, which was bought by E-Trade. I had a blast. I was the managing director of strategy of that $2.5 billion firm. And then many of you are familiar with the Options News Network. We were the, let's just call it the CNBC for options. I know John, I know Pete, Nigerian, great guys. They do as best job as they can on CNBC with options, but they're still kind of forced out into the backyard. We didn't do that. The Options News Network that I started, I hosted, I think 3 or 4 shows. We shot on the floor of the CBO, the CBOT. Every Friday we did a show called the Options Cocktail. Right about now, a couple years ago in Chicago, we'd be setting up our cameras in one of the local trader bars, and I'd be interviewing traders about what's going on behind the scenes. And it was a blast. I had an absolute blast, and I'd be lying if I told you I didn't feel like Eddie Murphy, Valentine in trading places. But I got to be honest with you, folks. Once, I thought, ooh, smart money, Wall Street, mysterious and smart people. Folks, they put their pants or their skirts on one leg at a time or jump into them just like you and I do. Ain't nothing special about them. And matter of fact, they think there's a little bit more special. Well, they kind of look down their noses at us, right? They call us liquidity. Didn't really, I love Chicago. You can keep the winter. So I decided to move my squadron down here to South Florida, where we started Top Gun Options. We're going on our 10th year in business and couldn't be happier. Let me get a quick show of hands. When I talk about strategic mindset, right? Hey, the 100,000-foot view in the market right now, you can be one of four things. You ready? You can be bullish. You can be bearish. You can think the market's going to be volatile and whipsaw all over the place, or you're market neutral. We have a ton of people in this room right now. Give me your answer. Bullish, bearish, volatile, or neutral? Go. Let me see. What's up, K3? Bullish. You can put V. There's a neutral. There's another V. Volatile. Ooh, a lot of volatile. Some neutrals, volatile. Denny, nervous. Joe, unsteady. Okay. Bullish, couple bullish in there. I got to be honest with you, hundreds of people in this room, ain't too many bulls here, right? How many of you are bullish? If you are, you're walking into what is called a bull trap. Folks, I think we're in a secular, yeah, say that 10 times, secular bull market, but we are in a bearish trend in that. We are walking right now into a bull trap, and it's right short of here of 2,800. So, folks, I want to talk about where we're going to target the market for the rest of 2019. Is this the big one? Right? Is this the big one? And if you haven't figured it out by now, as a former naval aviator and a political science major, poor kid from New Jersey, I'm not the sharpest tool in the shed, so I use a lot of acronyms. The acronym I want to share with you real quick, and then I'm going to show you that TREDGE that I talked about, is FIROC, not IROC. I graduated from high school in the 80s, so I jumped in my IROC with way too much Drakkar Noir on in South Philadelphia and South Jersey. FIROC, not IROC. One of the biggest issues is what? The F in FIROC stands for the Fed. Ladies and gentlemen, months ago, October, November, reporters were screaming at the president, are you going to fire the Fed chief? Does anybody remember on October 3rd, Jerome Powell more or less ended capitalism, and then in December, hey, everything I said in October, I kind of was wrong. Ladies and gentlemen, this is like the Pope coming out and telling Catholics that hell doesn't exist, man. I thought that Jerome Powell would do his job as the Fed chief and take away what is called the Fed put under this market, and he didn't. The Fed blinked, and now we're having this rip your face off market rally. The I in FIROC stands for impeachment. Love or hate Donald Trump, which it seems like it's either one of those, the next 2 years is going to be an absolute clown car in Washington. Exactly, Chris, the big one. Somebody got the reference. The big one is what? From Fred Sanford. Seems like every episode of Sanford and Son, Fred Sanford would grab his chest and say, Lamont, you big dummy, this is the big, I'm coming, Elizabeth. Is this the big one this year? Well, these issues in FIROC, it might be the big one. I think that Donald Trump is going to get impeached. Is he going to get convicted in the Senate? Of course he isn't. But we're going to get dragged through the mud for the next 2 years, right? Doesn't matter if the dude's going to impeach. Adam Schiff, Maxine Waters, who's under 3 House investigations, who's the head of the House Finance Committee, it's going to be awful. She's already told, hey, Wall Street and big oil CEOs, I'm going to drag you up for, my God, I was going to say lynchings. That would have been awful. Too soon. We're going to see absolute gridlock out of DC. So that's the one I, is impeachment. The other I in FIROC, ladies and gentlemen, is Iran. Does everybody remember when the president got in office, what he did? He tore up the Iranian nuclear accord, the nuclear agreement. Don't even get me started on the politics behind that. What I'm getting at is the president in a couple weeks is going to be in Vietnam. Imagine that, a United States president on Vietnamese soil, meeting with the leader of North Korea, maybe signing a peace deal to end the Korean War. Shocking. What's next on the president's radar? Folks, it is Iran. And if you're the type of trader that's sitting here right now going, Dude, what the hell does this have to do with Tesla? Show me a trade on Tesla. You are a very tactical trader if you're asking about this, right? This is it was a scam, Iran nuclear deal. You need to stop listening to CNN. Rosa, I guarantee you I don't watch CNN. I'd be the exact opposite of that. But what I'm getting at, folks, is there's going to be a lot of volatility in the energy markets going forward because the president, again, love or hate the guy, is going to be what? He's going to be going after Iran. What was this? What's the date on this? A month ago, January 15th, Iran came out. They showed us pictures of their secret underground bunkers and said, hey, we're enriching uranium and we're most likely building nuclear weapons. What I'm getting at, folks, is 2 years ago, the market imploded the afternoon that Donald Trump said, what? I'm going to rain fire and fury down on North Korea. Here he is a year and a half later, shaking the dude's hand and maybe having peace. We're going to see a lot of volatility for the rest of 2019 after or as he goes after Iran. The R in FIROC is a potential recession. The IMF, not Tom Cruise's IMF, but the International Monetary Fund, headed by Christine Lagarde, a couple weeks ago said what? We're seeing a global slowdown. What did the Federal Reserve, the Humphrey Hawkins testimony is next week. Jerome Powell is going to be sitting in Washington in front of the House and the Senate next week. Our economy is slowing. It's still good, but it's slowing. So the R is a potential recession. The O I already hit in FIROC is oil. China's economy, folks, is imploding, not just because of the trade war, also because of their massive debt. Remember, folks, the Chinese government, one of the big issues in this trade war we're fighting is what? Government subsidies of Chinese companies. But the Chinese, they can, the PBOC, the People's Bank of China, has got to feel like Scotty right now. I'm giving you all I got, Captain. I can't give you no more. So if China implodes, folks, the rest of Germany, look at Germany's GDP the other day. The global economy is slowing down, and if that slows down, oil is definitely going to get hit. And I'm going to tell you, as opposed to some really, some good-looking dude on CNBC with a good haircut and a nice suit, contrary to what that guy would say, like, oh, low oil, low gas prices are good for the economy, that could not be further from the truth. I'll explain that when you become a TGO member, but low oil, low gas will absolutely cause a recession. I guarantee it. And we already covered Iran. The C in FIROC before we get trading is China. In case you just got back from the other side of the moon, we're in the middle of a trade war, right? And we're beating the heck out of each other, so to speak. We're both getting bloodied. And the president obviously thinks that he's being less bloodied than Xi. Ladies and gentlemen, this is not about a trade war. If you were at Top Gun Options, I would have shown you would have seen a report that I showed my members 2 months ago that a Chinese admiral at a conference was quoted as saying, what are you talking, trade deal? What are you all, stupid? We could care less about trade. This is about strategic dominance in the Pacific and the world, and China becoming a world power and overtaking the US. This was a high-ranking Chinese admiral. What are the Chinese people going to do if they're losing their jobs or their economy is slowing? Did they write their congressman and complain? Well, they could, and they'll be thrown in jail. Are they going to go protest in Tiananmen Square? How'd that work out last time? So in a trade war, China can make people smile at the end of a bayonet, folks. I'm telling you right now, and let's actually get over here to the market. I actually believe, and you're ready for this, this is going to be shocking to some of you, that this rally, this V rally, first of all, markets don't do this. Okay, genius, it did this. Look at it. That's exactly right. This right here, folks, is a retail and kind of a little bit of a FOMO rally, fear of missing out. This is not an institutional rally. How do I know? I talk to institutional dudes and ladies on a daily basis. Goldman Sachs came out with a report a week and a half ago that said, if you missed the January rally, you missed the 2019 rally. Let me ask you this question. Who has been the #1 buyer of the S&P 500 year to date? Who has been the #1 buyer of the S&P 500 year to date? And I know I have a lot of TGO members in here, so you're not allowed to answer. Go. Why is the S&P 500 up here? Besides the Fed, obviously, and Jerome Powell putting a Band-Aid on our boo-boo and saying he's going to love us forever. Who has been buying the S&P 500? Let me put my cheaters on here, my glasses. Pam got it. Joe got it. Chris, it hasn't been Buffett. God, Warren Buffett lost $4 billion today. How about that for a busted trade with the Kraft Heinz deal? A couple people got it. Let me tell you, the number one buyer of the S&P 500 year to date has been who? The S&P 500. Stock buybacks, ladies and gentlemen, have been propelling this market higher. Why? Well, Jerome Powell is more or less set. So here's Jerome Powell, folks, October 3rd or whatever it was. I'm going to step on the brake. I'm raising interest rates. I'm going to shut this economy. I'm going to throttle it back. We had an absolute temper tantrum. The market went crazy to the downside. Jerome Powell blinking his eyes going, oh my God, I can't believe that happened. You know what? I think everything's good. We're just going to sit on our hands for a while. Whew. When interest rates are low, stocks will grow. When interest rates are high, stocks will die. Sounds like a little nursery rhyme, but yes, Mary, I will say that again. Think about it. When interest rates are high, right? Apple, if you're the CFO of Apple and money is cheap right now and you have a lot of money, what do? You buy Apple, right? When interest rates are high, money's more expensive. And stocks, you got it. When interest rates are high, stocks will die. When interest rates are low, stocks will grow. What has happened since Ben Bernanke at one point was pumping $85 billion a month in liquidity into the market? Stocks went up. This is probably the time in your trading career when many of you learn that the economy and the stock market are two completely different things. The stock market ain't the economy, folks, and other way around. Okay, so in the era of cheap money, the number one buyer of the S&P 500 has been the S&P 500. So I'm going to tell you right now, ladies and gentlemen, we, for the first time, oh man, I'm dating myself. I've probably been doing this for 26, 27, let's just say a quarter of a century. I have never seen a 1, 2, 3, 4. We are looking at a quadruple top in the S&P 500. Right around here, 2,800 is resistance. Pretend you're a hedge fund manager real quick. You're sitting in your office down here in Fort Lauderdale. Gal walks in with $100 million in a suitcase. Don't ask where they got it from in South Florida. But anyway, they said, put this capital to work right now. As a hedge fund manager, I'd be like, take your money and go home. Where are you going to deploy capital? Who was it? Bank of America came out with this report the other, where is it? You ready for this? What is overbought right now? You ready for this? Everything. Here's the everything is overbought from Bank of America. The S&P 500 is overbought. The 10-year, the 2-year are overbought. Oil is overbought. Gold's overbought. The everything is overbought index is at extreme highs. How many people in this room want to jump into a market when everything is by historical valuations overbought? That's a rhetorical question. Please don't answer that. Percentage of assets with a negative total return in US dollar terms. Holy shnikes. When's the last time we saw something like that? 2008, 2009-ish. So folks, just about everything, this is the everything rally. Usually you can do a good job pairs trading, right? Oh, my, gold's having a rally, I'm going to short the dollar. Dollar's having a rally, I'm going to short gold. Oil's going up, I'm going to short the airline. Pairs trading has broken down right now. So don't get me wrong, markets can keep going up. But what I'm about to tell you right now is, first of all, we've come way too far, way too fast. And right now, and let me look over my shoulder. Nope, still hasn't happened yet. The president is waiting to meet with the vice premier of China. Folks, this market has trade war fatigue. This dude, the China special envoy, has the authority to negotiate on behalf of President Xi Jinping. The last time he sat in the Oval Office, what was that? Seems like a year ago. It was probably a month ago. And he said, hey, Mr. President, we're going to buy a couple more soybeans. The president, huge, great. Look at this. I'm making magic happen. Folks, the three biggest issues, there are three major issues that if the president does not get, the market is going to sell off. I'm telling you right now, I used to be, up until about a week ago, I was Mr. We get a trade deal done, you're going to see a rip your, I'm going to quote myself, we get a trade deal done, we're going to see a rip your face off rally that's going to make 2017 look like a bear market. I have swung 180 degrees from that. Why? The three main issues that are facing us, let's go through them. The biggest issue, ladies, I'd say they're equal weighted. One of the biggest issues, ladies and gentlemen, is the theft of intellectual property. Folks, has anybody seen what the Chinese Joint Strike Fighter looks like? It looks exactly like the JSF. U.S. Navy submarine technology, stolen. You guys have to watch my sit rep today, my situation report. The last time Kraft Heinz was in the news was 5-6 years ago. I forget when it was, guys. What happened 2 days before Warren Buffett and 3G Capital announced they were going to buy Kraft? Does anybody? Let me give you a cool little story about options. About 5-6, whenever it was, when Kraft, where is it? Where Warren Buffett was buying with 3G Capital buying Kraft. I'd say the average options activity in Kraft was maybe one call every other leap year. There was essentially zero options activity in this stock. It was just an old stodgy stock, Kraft Heinz. 2 days before 3G Capital and Buffett announced that they were buying it, 80,000 calls were bought. Now, if you understand options at all, you know that holy shnikes, that was somebody knew something. First of all, that's illegal. Second of all, it was stupid. If you don't think the SEC, the FBI, or insert your alphabet soup here is going to notice 80,000 calls bought in a stock that rarely has any activity, you're nuts, or you're Chinese. What happened? So these calls were bought. 2 days later, the deal was announced, and those calls were, I can't even do the math. I mean, just hundreds of millions of dollars in profit. Well, obviously, Uncle Sammy saw that. And exactly, I wonder who bought them. Guess what happened? Investigation. Goldman Sachs. Knock, knock, knock. Hey, Goldman Sachs, it's the government. You bought all these calls, Goldman Sachs. I have no idea what you're talking about. Let's do some investigation here. It was an account. Wait, this is weird. It's an account in Switzerland. Okay, dig. Short story long. It was the PLA, folks. It was the 12th floor of, you can Google this story. The 12th floor of the People's Liberation Army is hacked into everything. They're hacked in the Goldman Sachs accounts, folks, Warren Buffett's email account. They trade on this information. They ended up busting this trade. Nobody claimed the hundreds of million dollars those calls made, obviously. It was China, folks. Why did I get on this little bit of a rant? Because does anybody in this room believe that the Chinese are going to agree? Well, let me phrase that question differently. Of course, the Chinese might agree to stop stealing everything. Does anybody think they're actually going to do it? So not only is the president saying, hey, man, you guys need to stop stealing our stuff. The president also wants the Chinese government to stop subsidizing all the Chinese companies, right? And guess who's too big to fail in China? Everybody. They're propped up by the government. And obviously, the last big pillar is the forced transfer of technology. It does sound like a movie plot, Em. It does. Here's what I'm getting at, ladies and gentlemen. And if you're sitting here going, what is this guy getting at? You're a very tactical trader. Whenever we do, let me show you my methodology of how I trade. It's called SOT, Strategic, operational, tactical. We do 4 live trade briefs a week, Monday through Thursday, different portfolios and different mindsets. Monday, we do weekly options, which is a 30-minute tactical trade. Where do you see our 2 weekly options trades for this week? But here's how, most of you sitting here going, all right, dude, get to the trade. What are you talking about? What's the trudge? Don't be that way, man. In our trade briefs, I give you a strategic brief. What's going on around the globe? How many of you woke up 3 years ago and went, why is my 401k a 101k? What is a Greek debt crisis? And then a year and a half ago, you woke up and said, where's Crimea and why did Russia just invade it? Folks, you have to know what's going on around the globe, economically, politically, or militarily. How about the Brexit? We made I got the Brexit wrong. You ready for this? I was wrong about the Brexit. I thought they'd stay. I made 44 grand being wrong. How? Trading volatility, right? So these issues impact. After I give you a strategic brief, it's about 15 minutes in each brief. We peel back the onion, and then I get operational. What's going on domestically? What's the Fed doing? What are earnings doing? How'd the Philly Fed do this week? Core durable goods order. We peel back the onion, and we also political issues. For those of you who can't stand trading politics, I'm telling you, you're trading wrong. I used to love the government shutdowns. Not as an American, I hated them. As Gordon Gekko, I loved government shutdowns. We'd get long volatility going into a potential shutdown, and then before John Boehner would come to the microphone smelling like cigarettes and his lip quivering, we'd get out of that trade and make money. So you got to know what's going on domestically, right? Then and only then in our trade briefs do we get tactical and trade. Does that make sense? I know some services out there and crying exactly. Some services out there just throw trades at you. That's awful. Okay, great. I see this trade. Why? Why are we in it? When are we getting out of it for max profit, for minimum loss? Folks, I'm going to give you a 7-step trade plan when you become a TGO member, just like a checklist, man. Why are we getting into this? How much capital are we risking? When am I going to eject for max profit or min loss? Boom, boom, boom. I know exactly what I'm going to do to the second during the life of a trade before I ever get into it. Okay, so that's kind of our methodology. And like I said, you're going to get essentially a 7-step trade plan when you become a member here. I'm going to skip that just for the sake of time. Real quick, hang on one second. I needed to see how Amazon's doing. Love it. So let me show you before we get to our trudge, because I know we have some TGO members in here. We don't do live trading on Fridays because I have coaching calls all day. Look at this. We did this February 19th. Obviously, the market was closed on Monday. So on Tuesday, I did a joint weekly options and primary live trade brief. Okay, weekly options, very tactical. Obviously, we're trading weekly options. Primary live trade brief. We trade the front months and also the back months and hedge. Look at the weekly options trade we put on Monday. Okay, and it was a live trade brief. During the trading session, I took a screenshot of the trade. I'll show you the trade. That's it, Amazon. I'll show you the max risk and everything here. But I also sent out a text alert. If you're sitting there going, hey, Wiz, every Monday at 1 o'clock, some of us have to work for a living. 85% of TGO members work. Guess what happens? They're sitting in death by meeting Monday at 1 o'clock. Their cell phone buzzed it was Tuesday with this Amazon bull put spread. Take a look at this Amazon bull put spread. Expiring in an hour and 29 minutes. 30 of the Feb 22 1600 puts. Okay, that's me saying I believe by an hour and 29 minutes from now, Amazon is going to be trading above 1600. Okay, Wiz, what if you're wrong and Amazon was going to implode by today? Well, we bought downside puts to 1597.5. This tactic, not a strategy, tactic is called a bull put spread. I was bullish on Amazon for the week. I'm using puts and it's a spread. Bull put spread. Now, some of you are obviously sitting there going, isn't it called a credit spread too? Yep. Isn't it called a vertical spread too? Yep. Can't stand that about it. When I first got into options when I was a 23, 24-year-old junior officer, I'm like, wait a minute, this thing's called 3 things? Yeah. Okay, I'm calling it one thing. I'm calling it what it is, what the tactic is. It's a bull put spread. But yeah, we're on Tuesday, we brought in a credit of about 65 cents. I sent out the text alert. I said, hey, let's try and get filled on this trade at 65 cents. And I usually give my traders a window like, hey, let's go a nickel wide, meaning I'd go up to 70 or as low as 60. So if we got filled at 65 cents on Tuesday, here was our potential metrics. Now, the first place I'm going to teach you to look at in every trade is right here, max potential loss. Don't ever, and for years, I'd always told the folks at, well, it was Trades Monster, then Options House, then E-Trade, I'm like, switch these two, please. No, you know, people want to see the max profit first. I'm like, those people are awful people. They're not good traders. And a fighter pilot and options trader always looks at the max potential loss first. In this case, $5,600. Where did I come up with that? Well, first of all, that was based on 30 contracts, right? At Top Gun Options, our 4 model portfolios are based on a notional $100,000 account. At any given time, I think accelerated retirement portfolio has about the most deployed. I think it's about 55 out there. I at any one time, folks, I keep about half of my powder dry. But I'm going to teach you as a trader, you need to have what we in the squadron called an SOP, standard operating procedure. My SOP at Top Gun Options for the weekly options portfolio is not to risk more than 5%, or if you're a political science major like me, doing some quick math based on a $100,000 model portfolios, I don't want to risk more than $5,000 on any one trade. Now, if you're sitting there going, dude, I got a $10,000 account. Well, don't do 30 contracts, do 1, do a million, do 0. I can't tell you what to do. I don't give trading advice. What you're getting to do is watch what a professional trader would do, right? So obviously this is a little north of $5,000, it's 5,600, but as the pilot in command of this portfolio, I said, check, I acknowledge this is my max potential loss. Now that I put a check mark next to it and go, got it, I'm the pilot in command, I know my max risk. This trade could potentially, by the closing bell today, see a profit of nearly $2,000. And if you see the probability right there, that's using at the money volatility in Amazon options at Tuesday afternoon when we looked at it. This trade had a nearly 75% probability of at least breaking even. Let's take a look at this trade right now, and then we'll get airborne at our trade. It's at 2 cents right now. What do we get filled at? 65. So you ready for this? 65-cent credit we took in. You can maybe get out of it for 2 cents right now. Look at that. 64 times how many contracts? 30. This trade is up. It's essentially at 99% profit. Let me get a hell yeah if you would have liked to have made, since Monday, $2,000. People already beat me to it. Hell yeah. Of course. This was on limited risk, guys. Jeff Bezos has had some kind of bad, naughty news lately, but if Amazon between Tuesday and today went to 0 for whatever reason, the most I could have lost in this trade was $5,600. Now, take a look at what I did yesterday afternoon in our live trade brief that is called Analyze Your Trade and Weekly Debrief. We looked at this spread. I looked at legging into, we looked at legging into an iron condor on Amazon yesterday. Let me blow it up a little bit since it's small looking here. We looked at selling the 1640, 1642.5 bear call spread at about 50 cents. Let me show you the metrics in that one. Max potential risk right around $5,800, but to potentially make $1,700. Okay, let's see how this one. This is called an iron condor, right? So it was selling. Let me close this. Selling the 1640s for today and buying the 1642.5. It's at a penny. So this trade is up. What was that? 16. This trade is up about $1,500. All right, let's do some political science math. $2,000 plus about 1,600. How many of you would have? Yeah, that was wrong. How many of you would have loved to have made 30? Let's just round down. $3,400 this week on. You ready for the amount of risk? How much did we risk? If you're sitting there going, well, Wiz, that trade's risking 58, and the other one was risking 56. The most. Oh my God, man, you're risking nearly $11,000. you don't understand what options are. An iron condor, ladies and gentlemen, is a range-bound trade. This is what the risk graph looks like in an iron condor. And Amazon, as I'm speaking to you, is going, I call it a football trade, unless you're a Chicago Bears fan. Amazon is splitting our uprights. This was the bull put spread at 1,600, and this was the bear call spread at 1,640. You can't, even Charlie Brown, right? Bless his heart, couldn't kick that damn football. Even Charlie Brown, folks, Amazon, here's kind of the football. Amazon could not, there's a little football, could not split in the air, and our bear call spread and our bull put spread both lose money. It's physically impossible. So the max risk in this trade was not 11 grand. You don't add the max risk of both these trades together, because even Charlie Brown, like I said, couldn't be that unlucky. The max risk in this overall iron condor was about $3,200. So this week at Top Gun Options, we risked in Amazon $3,200, and unless between now and the closing bell something catastrophic happens, $3,600 in profit. And I'm going to tell you right now, I'm not going to get into, we got to cover our dredge. That pays for, that's a year and a half. With 2 trades this week on Amazon, I paid for a year and a half membership into Top Gun Options. Let's talk about the dredge, folks, because we have got to stay safe. I believe, ladies and gentlemen, I feel like old Reds, in my rocking chair on the porch in Kansas, man. My knees are starting to hurt a little bit, which means a tornado's coming. I think we're going to do this. I actually think with this trade war fatigue, it might be a sell on the news event. Okay, so I want to look at a trade that's a potential hedge on the market going down, but also a trade. I think the market's going down. So it's 2 things, folks. It's a trade and it's a hedge. Ipso fatso, I came up with the term dredge. Let's take a look at what a good dredge would be. Volatility is in the gutter here, man. What's the VIX at right now? Look at the VIX. The volatility index, right? The heart rate monitor of the, let me do the 3, look at this. We are getting down to, remember this before Jerome Powell ended capitalism and then refound capitalism? Look at this in October. Remember the VIX, ladies and gentlemen? It was down here around 10. Let me give you a little, one of my wizisms, so to speak. When vol is cheap, volatility, when vol is cheap, you buy it. When vol is expensive, you sell it. Mary, I love you. I will say it again, and I will say it slower. Sorry, I just love talking. Actually, I don't love talking. I love trading. I love helping people out. Listen to me. When vol, you got it, Chris. When vol is cheap, buy it. Look at this resting heart rate. Every time, it looks like a heart rate monitor. Remember, folks, the VIX, the volatility index, ain't a stock. It doesn't go, oh, a little bit of earnings, miss. Hey, it doesn't go up and to the right. The VIX ain't a stock, folks. It returns to its mean. Oh my God, we're all going to die. The market's going to zero. No, it's not. Right? Think volatility like a big salad bowl, right? A big bowl of pasta, and take an orange and put it on the side. It's going to roll around in the middle and then end up back in the middle, right? That's what the VIX does. So let's take a look. Barclays got rid of the VXX, and the new thing that they came out with to trade volatility is the VXX Bravo, right? The short-term futures ETN. Take a look at this. It almost, hey man, that kind of looks like the VIX chart you just showed us. Yeah, it almost does. But look at this. 1, 2, look at this. We are, well, let me start back here. Let me just put a straight line here. And then I'm going to grab the little spotlight. 1, 2, 3, say it with me, 4. What did I just say? Did we have a quadruple potential top at? Yeah, Wiz, you just said the S&P 500. You just said for the first time, and you couldn't remember since you're getting old, how, I don't, folks. I can't remember the last time I saw a quadruple top in the S&P 500. So guess what? Looking at volatility, I'm going to tell you, I can't remember the last time I saw a 1, 2, 3, 4. We're actually through it. So folks, one more time, what I'm going to show you right now is called a hedge. It's a trade that I also think serves as a hedge. If the market rolls over and volatility spikes, this hedge will make money. If it doesn't, and I'm wrong, and you know what, peace, love, and understanding breaks out with Jesus, Ganesh, Buddha, and Muhammad all came back to life, the VIX is at zero, man. I'm going to love that. I'll have inner peace and we'll all be happy. Great. I don't think that's going to happen, folks. Historically, when the VIX gets way cheap, what happens? Folks, this is cheap insurance time. So and what do I want to cover, man? I live down here in South Florida. The rumors that I heard, I got dudes in uniform. The president just doesn't say, hey, I'm going to meet with the premier of China at Mar-a-Lago tomorrow, make it happen. They plan this stuff out. I'm hearing that the president's wanting to meet with Xi in the middle of March. And that's what I think, if it does, the market participants I talk to a lot of people day to day, folks. If that doesn't happen and we don't get some sort of grand deal that the president's promised, or it looks like the dude is saying, look at me, got a huge deal, it's phenomenal, and we all know it ain't, we're heading down. So what do I want to do? I want to go at least, let's hop in my time machine and go out at least to cover March. Let's just cover the entire month of March, and I'm going to pull up the March 29. We got 35, my God, man, 35 days in this market is a lifetime. Let's take a look at the chart real quick. I'm going to teach you, and again, I'd usually take an hour just alone to cover this tactic, but obviously I want to stay on time for Reed and all my folks here. Let's look at maybe the 30. So I'm going to look at a trade that is, I'm going to initially put on what is called a bull put spread, right? Let me see how many contracts I could do. Again, I don't want to risk usually more than $5 on any one trade. We could probably do more than that. Let's do $1.50. See what that gets me. That's probably be around $4 Yeah, 30. All right, so look at this. Ladies and gentlemen, this is called a bull put spread. I'm bullish on volatility coming back to life. I'm using puts, and it's a spread. It's also a credit spread. This is bringing in 25 cents, right? Look at this. I'm only risking $3,800. This is a credit spread, folks. Oh, hang on, Wiz. You're telling me somebody just walked into my kitchen, hopefully you know them, and they said, hey, we're going to pay for your auto, home, and life insurance for the next 30 days. Would you do it? Look at this risk to reward ratio, 1-to-1. This is a good looking trade, but ladies and gentlemen, I am very, very, very bullish on volatility. So I'm going to turn this into what I call an afterburner trade. I'm going to take this credit, this 25-cent credit. You know what I'm going to do? I'm going to go out and buy a bull call spread. Folks, I think volatility is going to have one. Look at back here. Spike, 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 massive spike. Nothing, nothing, nothing. If there's no massive spike in volatility in the next month, I'm going to be happy. Why? Because when you become a member here, or at least take a test flight, you're going to see all my longs I have. CSX, Raytheon, MGM, Amazon, right? If volatility doesn't implode and the market has a rip your face off rally, I'm going to be happy. But check this out. Since I really, really, really want to hedge against a spike in volatility, I'm going to add a bull call spread. I'm essentially going to take the credit that this bull put spread, and I'm going to add a bull call spread. Maybe buy the 31.5, 32 bull call spread. Okay, I got to do the right amount of contracts. Yeah, I'll leave this trade up here for a couple minutes, guys. Again, I'm more worried about that's probably a little bit too much risk. Let me go down a little bit, maybe $1.25 in contracts. Yep, I will. Like I said, folks, in my regular live trade brief, we'll spend an hour to an hour and a half going through this. I had to give you kind of my intro and who I am, because if you just show up to these things and you're looking at trades from somebody who you kind of don't know, I just, no offense, you deserve anything bad that's going to happen to you. It's just not smart. So ate up some time letting you know who I am and my methodology. But yeah, I'll leave this up on the screen here. Let me get right down to around $5 in risk. It's probably going to be about 100 contracts, but let me press forward just for this. Oh, nope, I can go up a little bit. Let's go to 120 contracts and see. Max risk, it was 125, doofus. Should have listened to myself. All right, that's oh man, look at that. Bullseye. So this, ladies and gentlemen, this tactic, not strategy, this tactic that you're looking at right here is called a double vertical. Oh man, you lost me. No, I didn't. It's a bull put spread, which you get paid to do, and you take that payment and go, you know what? I'm really bullish, so I'm going to add a bull call spread. Just look at the picture, folks. It's called a double vertical. It's just two vertical spreads on top of each other with the same strategic mindset. In this case, I'm bullish on volatility. And everybody, if you at least listened to me instead of clubbing in the Bahamas mentally for the past hour or 45 minutes, you looked here first. Wiz says he's got an SOP. He doesn't want to risk more than $5,000 on any one trade based on a $100,000 model portfolio. Don't want to risk $5,000. Don't trade 125 contracts. Want to trade risk 10 grand, trade 300 or 250, whatever it is. But look at this. Look at the metrics of this. You're coming at it, so your max potential loss. Again, ladies and gentlemen, remember, well, Wiz, I don't want to lose $5,000, but remember, if you have a bunch of longs on and we have a rip your face off rally in March, those longs are going to print money. This, ladies and gentlemen, is your ejection seat. I never climbed into the F-18 and looked at the ejection seat and said, you know what a waste. Hey, Chief, come pull the ejection seat out. I'd rather have 300 pounds of extra gas, actually 800 pounds. I guarantee you, ladies and gentlemen, that was the mission I was going to get killed on. This is a potential ejection seat. So you're risking 5 to potentially make 7,500 bucks if volatility has a pretty big spike in March. Look at the potential probability for breaking even. There's a 57% probability, better than a coin flip, that you're going to at least break even or make some scratch. Folks, this is a no-brainer for me. Yeah, I'll again, here we go. I'll leave it up here for a couple minutes. Let me review. It is a bull put spread, right? I'm bullish and I'm using puts. So it's the 30, 29 and a half bull put spread, BPS. I'm bringing in a credit to do that. I'm getting paid to do this trade. I'm cheap, folks. I'm going to take that credit and I'm going to use it to buy a BCS, bull call spread. Now, if you're wondering, folks, this is a normal trade. I mean, if you press send, market makers look at this and go, okay, they're doing a double vertical, or a what the hell did the other platform call? I forget, some other platform called it a whatever. I call it a double vertical. But you can put this in, folks, as two separate trades. You can put it in as a bull put spread and put it in as a bull call spread. I actually do this, folks. I put it in as two separate trades because you usually get better pricing mid-market here and mid-market here for the two spreads. So yeah, absolutely, I would put this in as two trades. And I will, Steve, let you know how you can at least take a test flight here in about 2 minutes. But if you take a test flight through next week, I'm going to tell you how to manage this trade. Hey man, what if volatility? You're right, Wiz. Oh man, sold on the news and we're heading lower. We're heading back to our December lows. I'm looking at some serious profits in here. How can I manage it? Real quickly, you got 125 contracts? I don't know, man. Maybe you take half of them off and let the rest of them ride as a hedge. Maybe you close the bull call spread because it's a debit spread and doesn't like a Greek called theta. It doesn't like time decay. Let me put some eyes on it. It doesn't like that theta. So maybe if you're looking at some nice profits in the bull call spread, you close that one and let the bull put spread ride. Again, that's a 2 minute, that wasn't even 2 minutes. That was a 20-second brief on how to manage this trade. I will give you an hour to an hour and a half lecture on how to manage this trade. And as a matter of fact, if you don't even know what the heck an option is and you've been sitting here, with a drool cup underneath your mouth, don't worry about it. As a matter of fact, we started, when was it? Tuesday night. We started 4 times a year, folks, February 20th. 4 times a year, I do what is called full throttle training. I do 8 live sessions from 7 to 9 p.m. We do them from 7 to 9 p.m. Why? Because the market's closed, right? During our live trade briefs, what do I want to do? Live trading, you got it. Welcome aboard Top Gun Options. You get it. So actually, if you get on board now, you can watch the Welcome Aboard brief. I tell folks where I get my financial intelligence. I go through our 7-step trade plan and our strategic, operational, and tactical methodology. And then last night, after my daddy-daughter dance, which brought tears to my eyes, my daughter Keely, she's in 5th grade. They stopped the daddy-daughter dances in 5th grade, so I had tears in my eyes. But I got home and we did session number 2 last night, options basics. So if you're sitting here going, for the love of God and all things holy whiz, I don't even know what a bull put spread is. Welcome aboard, because the next week and weeks after, we're going to be doing iron condor. These are all the old ones from the last time we did full throttle, November. These are all still valid, folks. And iron condor was an iron condor in the early 80s, and it'll be an iron condor in 20 years from now. So the specific material might be a little dated. This was when the world started to end, right? November. But you can watch even the older ones before we do the new ones. Synthetic stock, long call diagonal on MGM. Double, oh, look at this one. There you go. This is an hour-and-a-half session right here on a double vertical on VXX, what we just did. Isn't that cool? So, Rick, I appreciate that. Going through my 4th full throttle session and still learning from the basics. I like that, man. Rick's been a TGO member for. That's what's cool, folks. Once you become a full throttle member and you're a TGO member, you get access to all the full throttle sessions I ever do again. And it's funny because I have members that have been here for almost the full 10 years saying, hey, man, they go to all of them. And they're like, hey, I learned something new in every webinar. Folks, I had nearly 3,000 hours in the Hornet, in the F-18 Hornet. I got to tell you, even on my last flight, I learned something. So I appreciate your kind words, Rick, and some other folks. So here's what I'm going to do is, and I'm sitting here down in Fort Lauderdale, folks, looking, beautiful day out. I'm going to, in a little bit after I hit the gym, I'm going to go out to happy hour, and I'm going to spend right across the street at it's called Lobster Bar. I get a nice glass of 42 tequila, 1942 tequila. You know how much it is? It's $45 freaking dollars. Now, Rob's up in Bozeman. He's like, yeah, that cost about $2. I get it. But here's why I bring that up. Because for today, and my buddy Reed, and I love working and partnering with these guys, I do a 1-week test flight. So essentially 7 days for $38. You're going to get access into our 4 live trade briefs next week. And they ain't one size fits all. Accelerated retirement, weekly option. You get access to all the different ones. I just showed you, folks, that TGO members this week potentially made nearly $3,600 on our Amazon weekly options trades, man. $3,800. Again, men lie, numbers don't. So let me put the link in the chat box here. It's pretty easy to remember. Everybody's seen the movie Apollo 13, right? Go flight. Remember when Gene Trance, or what's his name? Yeah, something like that. Gene, yeah, I have his book, man. He signed it. Failure's not an option. But when they go around, hey, I'm go for flight. Weather, go flight. ECS, go flight. Fuel, go flight. That's easy to remember. Go.topgunoptions.com/go flight. And I got to be honest with you, man. Next week is the week, right? We're at the precipice here, man. We're either going to do this or we're going to do this. We ain't just going to sit here and chop side. Look at this. We didn't chop sideways forever with these things. So one of these things is going to happen, and I think trading with us, at least for the next week, is pretty damn smart. And if this is your if this is your last $38, don't do it. Please don't do it. But here, go.topgunoptions.com/go flight. And like I said, you can get airborne next week. And I'm going to throw in, you know what's funny? You'll get access to our advanced workbook 198 paid. We have 3 workbooks. When you become a full member, you get all 3 workbooks. But we charge $55 on our website. If you want to buy the advanced workbook on its own, it's $55. This is 38. Now, again, I failed marketing. I'm a trader and an aviator, but if you don't understand that $38 and you're getting something for 55, let alone the whole week, folks, is actually worth more than that. If you wanted to get into these individual sessions on their own, it's about $200. So enough. I can't drag you to water and make you drink. Yes, Steve, I'll leave. And it is making money already. So check that out. You're absolutely right. So, and somebody noticed that. Everybody look down here. Everybody look here real quick. Look down here. You are, and somebody said it the way I love, Amy, absolutely. Joe, it's time to splice the main brace. Absolutely, the smoking lamb is lit. Ladies and gentlemen, this bullish double vertical that I just showed you, you're getting paid a credit. You're getting paid a potential credit of, or not a potential credit. If you did this trade right now, you'd make $1,250. You are getting paid to be hedged against a spike in volatility for the next month. That is pretty cool, ladies and gentlemen. Okay, so at the end of the day, can't drag you to water and make you drink. You got to do that on your own. All you need to do is head to go.topgunoptions.com/go-flight. Just kind of remember the movie Apollo 13. Somebody just asked about personal coaching. I do personal coaching, but I'll tell you what. Why don't you take that 1-week test flight, and then we'll cross that bridge when we come to it. All right. Wish I could hang out a little bit longer, but as Joe just said, I got to go splice the main brace and set sail with the captain, or actually some tequila. $45 instead of 38. So Reed, thanks for having me again, my friend. You have a great weekend. Happy hunting. Make sure you hedge, and God bless. Thanks again, my friend.